In this video, I'm going to highlight one red flag for Upstart stock in 2022 and beyond. As you can see on my screen here, Upstart stock is down almost 95% off its highs it reached in mid 2021. So what's going on with the stock? Let's get right into it. The main reason noted by management for the cause of the revenue miss in its most recent quarter was a funding constrained environment. And this is the red flag I'm highlighting here for 2022 and beyond. What this means is that Upstart is a lending platform that connects lenders and borrowers. And the trouble Upstart is having is that lenders are no longer, or I shouldn't say no longer, I should say reducing the amount of funds that they are lending on the platform. And of course, with less and less money provided to borrowers, that's constraining transactions. And so borrowers are still there willing to borrow, but lenders are not offering these loans, at least to the degree they were in the previous quarters. And you can understand that, right? With the potential for an economic recession increasing in recent months, lenders are preparing for that environment by reducing the amount of money that they lend and also becoming more critical in terms of who they will approve these lending amounts to. So if we look down further here, having said that, the Upstart management says, this is Upstart's conference call in its most recent quarter. It says, having said that, in the last few months, lenders and institutional credit investors reacted more quickly and abruptly than we anticipated. Several of them have paused or reduced originations due to fear about the future of the economy. Well, what management is saying here is that yes, we knew that when there was a recession, when there was a pullback in economic activity, that these lenders would reduce the amount of lending. But this was even more quickly and more abrupt than we anticipated. So this is much worse than what they had modeled. And in fact, if you watched my video on if Upstart stock is a buy, one of the main risks I highlighted with their business model is that it's not yet proven. They haven't been through a business cycle and economic recession yet to determine if their models are calibrated correctly. And here is one example demonstrating that their models were not indeed calibrated correctly. They underestimated the impact that a recession would have on funding activity. And here's management saying that yes, we did not anticipate this being as meaningful and as impactful as it has been. So what's Upstart doing about it? Well, they concluded that they need to upgrade and improve the funding side of their marketplace. They're trying to onboard more lenders that are committing to lending throughout an economic cycle. So not increasing and decreasing lending activity based on the economic cycle. Well, good luck finding that. That's what bankers do, right? Bankers evaluate risk, and the risks are higher when an economy is approaching a recession, and bankers are less willing to lend in that environment. So who are you going to find that's going to be more willing to lend in a more risky environment? I mean, it remains to be seen. And even management acknowledges that fact, saying that we're currently evaluating a variety of opportunities to do just that, although we expect this to take some time to bring to fruition. If I will add, in my own words, if this happens at all, right? If they can actually find these lenders that are willing to lend during these down cycles in an economy. Of course, if the opportunity, the return on that investment was high enough, you could find lenders to come in. But at that rate, if you're asking, borrowers to pay such a higher rate on their loans, then you're going to impact customer demand for loans. There's not going to be that much demand if the APR is going to be significantly higher. And so there could be a mismatch there where you might finally get lenders willing to offer loans during these down economic cycles, but then the rate at which they're willing to lend at is going to turn off potential borrowers who are not going to want to borrow at those higher rates. So this is a balancing problem that I don't know if Upstart is going to be able to solve, and that's why I highlighted this as a risk for 2022 and beyond. Another option Upstart is finding is that they found that it makes sense at times to leverage their own balance sheet as a transitional bridge until they find the committed lending. So Upstart, instead of becoming a marketplace where they bring borrowers and lenders together to make transactions and take a fee for initiating those loans, they're now becoming the lender on the platform and offering loans to the borrowers. And now they're changing essentially the business model, and they acknowledge that this is a shift relative to what we planned and communicated earlier this year. They say that the reason they're doing this is because the opportunity to earn that return from lending right now, when there's such few lenders interested in funding these loans, offsets the higher risk in becoming a lender on the platform. And that remains to be seen if the loans made right now and over the next few months and over the next few quarters actually end up delivering a return on investment that is high enough to offset that cost of capital. And we don't know that standing from this point of view. We need to wait a few months, a few quarters, a few years for these loans to evolve and see what the performance on these loans are, what the default rates are, and what the payment methods were. And so it remains to be seen. Nevertheless, Upstart stock has become more risky simply from this shift in business model, and that can partly explain why the stock is down 95% so far off its highs, and now it has this headwind going into 2022 and beyond. All right, so that's all I've got for this Upstart stock update. Stay tuned for the next update. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.